back with closing trades and moving away from the market for a bit and telling you everything that's happening outside of the world of equities. The Delhi High Court has asked the RBI to respond to pleas about the misuse of borrowers' personal data by digital lenders run by NBFCs. My colleague Charu is here with more details on this entire matter. Charu.
The Delhi High Court heard a very interesting petition today where the petitioners said that violation of borrowers' right to protect their data has taken place through NBFCs using their digital apps. However, the RBI already has a 2025 circular in place where the norms have already been decided which deal with any sort of grievances of violation of privacy or data of the borrowers has taken place. However, the Delhi High Court asked the Reserve Bank of India to submit an affidavit, their steps that they have taken to protect the users or borrowers from violation of their private data. They have also asked to submit in the affidavit the steps that it took for the implementation of its 2025 digital lending directives and any grievance steps or grievance redressal steps that they might have taken since the inception of their norms that came out in 2025. Now, this is a petition that has been filed in Delhi High Court recently and no order has been given out by the court. Only an affidavit has to be placed by the RBI within 6 weeks.
Okay, Charu, thanks so much for taking us through that. So yes, those are the latest updates in this case right now, and we'll be bringing you more as and when we get them. But let's shift focus to the markets once again. We have Mr. Aditya Arora, founder and multi-asset research analyst at Analytic.in, joining us to give us a better sense on the market right now. And Aditya, let's talk about some stocks where we are seeing some swings today. Yes, Titan and Cipla, of course. But talk to us about your chart check on Maruti Suzuki, a 3% cut. Max Healthcare also 2.25% cut. How are these stocks shaping up on the charts? And if you're spotting any weakness here at all?
Very good noon to you and to everyone. I think the market structure has been a little weak and we are seeing a little selling across the board. Whether you talk about the large caps or mid caps, the selling is there evident. But when we are talking about two stocks, Maruti and Max Healthcare, then I think Maruti's today's dip was actually bought into, and we have seen quite a bit of recovery out there. So this candidate doesn't look so bad. We should wait for a breakout, and the stock is trading at 52-week high. In last 2 weeks itself, we have seen very good volume accumulation, and the stock is trading above important moving averages. So I don't think that the trend is too bearish in Maruti Suzuki. It's a buy and dip candidate at 16,800. One should keep stop loss at 16,200, and the targets one should watch out for are 17,400 to 17,500.
Okay, so that's the take coming in on some of the stocks that are in focus today on the weaker side. But this is from the Nifty 50 group of stocks, just delving deep to the broader end of the market and taking a look at what's happening over there. It seems like Tata Elxsi, a 10% uptick over there. Elecon Engineering is up 7.5% ahead of its earnings tomorrow. You have KPIT Tech, Sonata Software, Tata Technologies. So clearly, it's the Nifty mid-cap, it's the IT mid-cap basket that's doing very well for itself. Kunal, anything standing out particularly from this basket, Tata Elxsi, KPIT? If you had to rank these in terms of the strength on the charts, what would it be?
So I think after today's move, Tata Elxsi would be the better one. Okay. From the emerging mid-cap names, emerging I would say in the sense in terms of prices. KPIT Tech is still yet to break past about the previous immediate hurdle point. I think that's around 1240 marks, so maybe another 30 points on the higher side for KPIT Tech, and that's where we may probably get that one leg of confirmation for the stock price. From the earlier names, in terms of the ones which have been doing fairly well, but then the ones which had gone through a mild corrective phase, Coforge is managing to make a good comeback. Persistent, the stock making a very strong comeback today, and I think if I'm not wrong, almost recuperating 75 to 80% of the losses the stock had seen in the last 1 month. Broadly, I think from 6,800 levels, the selling had started for Coforge and had moved down towards 5,800, 6,000 odd levels. So it's managed to make a very good comeback for itself. So these are the few odd names on the mid-cap ones which looks attractive.
Okay, so that's on the mid-cap end of the basket. Aditya, talk to us about some stocks that are not doing well from the broader end of the market, and that's Ola Electric once again seeing a 3.5% cut. M&M Finance is lower by 4%. Any take on these names on the charts?
Sure, I think if we observe the complete auto pack, then the trend has been little sideways. And if you talk about Ola Electric, then that stock is little news based counter. Often we see lots of news, and the stock is jumping up, but soon the profit booking comes into the counter. But overall trend structure of Ola Electric is not so great, and it's a volatile stock. The stock is trading at 52-week lows almost. Although the selling seems to be almost absorbed, but we'll wait for signs for clear-cut recovery as the stock is volatile. I'm not bearish on Ola Electric, but we should wait for some proper signs, technical patterns for the stock to turn extremely bullish. And if you talk about Mahindra and Mahindra, then I think it's a good candidate on, just like Maruti, it's a good candidate of buy on dips. And the stock is testing its breakout zone of 3,700, where lots of put writers are also active. So this is an accumulation zone for the counter. The trend seems neutral to bullish over here. One should keep stop loss at 3650, and the target should be 3780 to 3820.
Okay, I'll switch focus though. In a crucial
Afternoon, and thanks for your time. We've been talking about all of these updates since morning. We've had a bunch of consumption updates yesterday and today, and over the course of the weekend and before that last week, it's only been the banking and NBFC numbers that we've seen. Right now, we've seen numbers coming in from insurance companies, so there's a lot of triggers in the market right now, but the market is not largely reacting to a lot of these news and these numbers coming in. What do you think is going to be the next trigger for the market to react? Is it actually going to be the Q3 earnings, or do you believe that on the back of these updates, the street is largely penciling it in already?
Good afternoon. I think that the market already knew that stable Q3 numbers would come in. The banking sector has grown by about 10 to 15%. The deposit growth there is at about 5 to 10%. If you look at consumption numbers, if you look at the gold companies, they've seen a volume degrowth. However, the revenue growth on the back of higher gold prices continue to be at about 40%. A little bit of slowdown within the QSR space is what we are witnessing. However, steady results is what I expect in Q3 from all of these companies. I expect Nifty 50 growth to be at about 5 to 10%, and individual companies will grow on themselves. I think the biggest trigger in 2026 for the market will be the Indo-US trade deal. If that really happens, that really lifts the sentiment of the market, and the market will then move on. If we don't see a trade deal, I think we will remain range bound, and stock specific is something that you should go for. However, in the longer term, we remain positive on the market. The market will continue to do well. Consumption, banking, financial services, chemicals, cap goods sector, these are something to look out for. And IT obviously continues to be a contra bet for us.
Okay. Aditya, the other set of stocks which have declared numbers, or rather at least given us a sense. Firstly, it's been a while, so good having you here. The other set of stocks which I was talking about, which have declared numbers, is banks and NBFCs. The growth there underlying remains quite robust. How would you play that theme? Would you play it through the PSU banks, which seem more reasonably valued in comparison to some of the private sector banks? Would you play it through the small finance banks, where the risk seems a little bit larger in terms of the credit cost? How would you play that?
So from my perspective, very happy with the banking sector. The banking sector is telling you that the growth is at about 10 to 15% in terms of AUM or loan growth, and 5 to 10% on the deposit side of it. So there's a three-pronged strategy that I employ. Larger banks, HDFC, ICICI, they will continue to do exceptionally well. They will be steady compounders in your portfolio. Then you look at smaller banks, where smaller banks like CSB Bank or a Federal Bank continue to do exceptionally well within their gold loan portfolio. Mind you, gold prices moving up gives a lot of traction to these banks. So that is the smaller bank side of it. Ujjivan companies like Ujjivan, which have also declared their NPS, they have seen improvement, and it sharply tells us that the micro lending cycle has abated. It is not turned around, but it has abated. The NPS have abated there, and now we should see a turnaround in the next 2 to 4 quarters. But they are highly risky bets, and only highly risky investors should look at that. And finally, within the PSU bank space, of course, we've seen SBI cross that 1,000 rupee mark. And I continue to feel that within the PSU bank space, only SBI is my topic. They have scale. They will continue to grow at about 10 to 15%. And from my perspective, NPA asset quality there will also be good. So from my perspective, PSU banks, I will only stick to SBI.
Uh, okay, I beg your pardon because we've got two Adityas on the screen now. So Aditya Agarwala, or rather Aditya Arora, I beg your pardon. Aditya Arora, what's your take with regard to Gopal Snacks? Give us a sense of that. The stock has moved 3.5% today in trade. How is it looking on charts?
Hi Harsh, I think you have picked a very good candidate in FMCG basket. We have seen underperformance in the complete pack, but this stock has been doing pretty well since last 2 weeks, and it's also accompanied by good volumes. This stock seems a bullish candidate as today's price action is pretty encouraging. This is bullish at 334. Stop loss should be kept at 320, and the target over here is 345 to 360.
The reason, Aditya, why we've picked this particular name to ask you is not only Gopal Snacks, but a bunch of these snacking and namkeen mixes companies that are listed. Motilal Oswal has come out with a note on all of these processed foods, wherein they're saying that the food processing industry is expected to grow at a CAGR of 9.7% from FY24 to FY27. They've initiated coverage on Bikaji Foods with a buy rating and target price of 900. Gopal Snacks that we were just talking about initiated a buy with a target price of 400. Pratap Snacks 2 initiated buy with target price of 1500. But for Mrs. Bector's Food, they've initiated a neutral with a target price of 280 rupees per share. So, trying to get a fundamental sense out of this, Aditya, talk to us about the view that you have on some of these names, and especially the kind of incremental growth that we're expecting to see here now that the GST on namkeens and packaged foods has also significantly been brought down.
So from my perspective, consumption continues to be a defensive theme. However, valuations across the consumption space continue to be really very punchy and really very expensive. So from my perspective, I expect these companies to grow at about, let's say, 10 to 15% on their profitability. However, the valuations are so aggressive that I don't see a case for a fresh investment as of now. Of course, mutual funds who want to be defensive will continue to invest in these stocks. But from a purely valuation perspective, I will tend to not invest in all of these companies. Rather, I would look at something like an ITC, where ITC is a conglomerate which also has their FMCG business, which I think is doing pretty well. So from my perspective, I don't have a positive view on this stock. Given the correction in ITC because of various reasons, I think that continues to be my pick within the FMCG space.
Sorry, I'm going to cross question you on this one. Only 24% of ITC's profit after tax comes from, or profit before tax, I beg your pardon, comes from the FMCG business, while 45% of the top line comes from there. So really it's margin dilutive for ITC. Would you therefore place your bets on FMCG where growth has slowed down? Multiples are obviously on the higher side amongst peers, while ITC trades at a lower multiple. But growth is slower and it's margin dilutive for ITC.
So it's all relative. From where they were 2 to 3 years ago, ITC is in much better space within their hotels business, within their FMCG business. So broadly, I'm talking about how the improvement is taking place. Of course, I'm not talking about profitability as compared to other peers. I'm just looking at ITC. The main driver here is a lot of scope for profitability turnaround within the FMCG space is available, and that should happen in the next 3 to 5 years as the company continues to invest aggressively in that business. So from my perspective, given the valuation comfort that I have got, and given the fact that the strong dividend yield also exists on ITC, and also a turnaround in the FMCG space is in progress, I think I have my bet is already on ITC.
All right, what we'll do is take a pause here, take a quick break, come back, continue conversation with all of the three gentlemen we have on our panel today. Stay with us.
Valley hotels earlier in the day. You have Ventive, you have some more hotels. Is there anything that looks better than IHCL right now on the charts?
So I think over the last few days, what has happened was many of the hotel stocks which are trading above their 200-day moving averages, the likes of Chalet, Lemon Tree, etc. Even these stocks have gone through a correction. Indian Hotels apparently was the one which was already below its long-term moving averages since the last, I think, 2 or 3 months specifically. But I believe that now after this selling which has happened for Indian hotels, the stock at 700 to 720 range where it's trading right now, I would probably sense that the indicators are a little bit more oversold for the stock price than what it was in the previous leg of the downtrend. And I would sense that this could actually be a good zone where traders could go for a contra buy. We've historically seen that whenever such kind of news flow happens into the stock price, when there is a downgrade of sorts, especially at a point when the stock has already been into an underperforming spree, that generally becomes a point where the stock eventually over the next maybe week or so tends to find a short-term bottom and goes into a bounce back mode. So I would sense that this dip could be a good buying opportunity on the contrarian side for Indian returns.
Okay, very interesting. Aditya Shah, where do you sit on in terms of hospitality? How would you play it?
So from my perspective, Indian hotels continues to do exceptionally well. The future capexes that are going to come up will continue to drive the growth for the company. However, paying 60 times multiple for a company which is in the hotel sector, which is very cyclical in nature, is really very difficult. So from my perspective, I tend to now, for the time being, avoid the entire sector per se. Purely basis, valuations are extremely aggressive, and we are in the middle of the cycle where either we are not in a clear top has not been made, or a clear bottom also is not there. From my perspective, I would tend to avoid this sector entirely. Fine.
Okay, how else would you play consumer then, Aditya?
So as I said, consumer is a very defensive sector where valuations are extremely aggressive. So our singular bet within the consumer space continues to be ITC. We are looking at 2 or 3 bets which are in the process of turnaround, but nothing concrete per se. So ITC is a pseudo FMCG company that we have our bets on now.
But Aditya, understood. You are bullish on ITC, but the one question that pops up in my mind is this entire excise duty that we've seen on tobacco. And the day that announcement came, stocks like ITC, you had Godfrey Phillips in VST Industries, they were battered in trade, and the biggest cut was seen on ITC on an intraday basis. Now, across the board, we're hearing chatter that ITC will need to, at minimum, take a 15 to 30% price hike to just be able to withstand this excise duty impact. Is that in no way deterring your view on ITC at the moment?
So time and again, the same story plays out on ITC and the cigarettes business per se. The cigarettes business is government's cash cow, and the government will continue to tinker with taxation. But from our perspective, we feel that the company is really very strong. The cigarettes business continues to be really very strong. A hike in cigarette prices would hit volumes to some extent, but we don't feel
I believe we've snapped that line with Aditya, and we'll try and reconnect with
subsectors. Within the subsector, CRAM CDMO space continues to do exceptionally well. That is one place where everybody should have good bets. There are companies like Syngene, there's company like Piramal Pharma, there's company like Suven. All of these companies will continue to do exceptionally well. So I'm positive on the CRAM CDMO space. Once we see the API space, companies like DV's, Laurus, Newland, these companies will continue to do exceptionally well and grow at about 10 to 15%. That's my second bet within the pharma space, the CRAMS area, the API space. Third bet continues to be generics. In generics, pricing pressure always comes in. We've seen Cipla get a Form 483 today because of the data integrity issues as well as the compliances that they have not been able to take. So from my perspective, I'm very cautious on the generic side of it. Positive on the CRAMS CDMO and the API space. Positive on the domestic diagnostic space as well. Companies like Krishna Diagnostics, which are into B2C, those companies are also looking really very interesting. So selectively invest in pharma, look at subsectors, and within that subsector, a lot of stocks are really available where you can invest.
Okay, so that's the take coming in on the pharma space.
Would you at all play the trade with the limited players that you have, and would they therefore be at a disproportionate advantage in terms of the way they're able to grow their business?
Sorry, Yash, I was not able to catch your question. Can you repeat that question?
Telecom airlines.
So on telecom side of the business, I assume you're asking. The line is bad, but I assume you're asking for the telecom side of the business. In
Bharti
the
Airtel,
telecom,
Indus
yeah,
Towers, and the
yeah.
like.
Yeah, yeah. So within the telecom space, I am pretty positive on Bharti Airtel as well as Reliance. I think Vodafone Idea does require a lot of things for it to turn around. So it's a duopoly business, and within a duopoly business, Bharti Airtel and Reliance will continue to do exceptionally well. I don't particularly share a view on Bharti Infratel, so will not be able to comment on that. But my view is that Bharti Airtel and Reliance, as a duopoly continues, they will embark on a series of price hikes which will mean that you and me pay a higher ARPUs, which will mean that these companies will make a lot of money going forward. So from my perspective, positive on both Reliance and Bharti Airtel.
Okay, so positive on that space. Kunal, on the charts, so Vodafone, last week Vodafone saw its own fair share of volatility and it wasn't a largely very good week for Vodafone. But that kind of drop that we saw on Vodafone, did that make the stock any more attractive on the charts or would you just cautiously avoid right now?
No, it made the risk reward attractive at that point of time.
Okay.
But now with the stock, not having any major follow through after that, I think it's indicative that the stock is going through a time-wise consolidation. Volumes have dropped down, so this could probably be an opportunity where traders would just want to lighten up the positions. The ones who would probably have expected maybe the news flow to be on the positive side and were disappointed, so they would probably have gotten an opportunity to try and exit the stock price. But then I think price wise, maybe if the stock drops down to 10 and a half odd mark, 10.7 mark yet again, that could be yet again an opportunity where the stock or the risk reward would start to look attractive. My sense is that the long term charts, this is the fifth or the sixth consecutive month, if I'm not wrong, for Vodafone Idea to be on the positive side. And 5 months back or 6 months back, when this uptrend started off, the stock was at 6 to 6.5 odd levels. So after 100% kind of a jump, there's bound to be a point where the next couple of months the stock may disappoint or go into a mild correction, time-wise pause for itself. But the uptrend which has started 6 months out back for Vodafone Idea, I believe should have more legs. So maybe I think if the stock pauses in the next couple of months and recedes back to 10 and a half odd levels, as I mentioned, that could be an opportunity to try and chip into the stock price yet again.
Well, very interesting. Aditya Shah, if I were to ask you the one possible sector, space, segment which could surprise on the upside, where Q3 FY26 numbers are concerned, what would that sector space be?
From my perspective, I think the banking sector will surprise in terms of asset quality. I think there will be an improvement in the asset quality across the sector. That is one of the sectors that I want to see. And I think IT results will not be as bad as everybody expects them to be. Those results will be really very steady. And I think some of the companies will also surprise by giving by upgrading the guidance per se. So from my perspective, banking, IT, and the third one, which I feel will do well, is the chemical space. They will also surprise many people who are very bearish on them.
Kunal, any favorites from the chemical space? Anything looking good on the charts?
I've not seen too many charts, frankly, from the chemical space, but I think SRF is the only one which I do track very, very closely. And especially, I think at maybe last month, if I'm not wrong, mid of last month, where the stock had broken past about 3,000 levels, that was a 200 DMA resistance for SRF. Once that was taken out, you saw the stock moving into a higher plane of 3,050, 3,100 levels, consolidated over there for the last 1 or 2 weeks post the breakout, and now I think it's getting up for a uptrend yet again. So don't track too many stocks from the specialty chemicals at least of late, but I think SRF is the only one which looks attractive.
Okay, that's very interesting as well. Jewelry companies, Aditya, we haven't spoken about that. Just the way in which we've seen growth come in terms of jewelry. Uh, Kalyan Jewelers, Titan, both of them doing very, very well, and they're market leaders to a large extent. Would this space or segment at all look attractive to you?
So, Harsh, we need to go in detail as to how this growth is coming in. So, from Q3 FY25 to Q3 FY26, the gold prices themselves have gone up by 46% due to a phenomenal year for gold. So revenue growth for a lot of these companies is in the range of 40%. For example, for Kadyan Jewellers, it's 42%. For Titan, it's 41%. Somewhere in that range for Senco Gold as well, which is around 48, 49%. So what I am really seeing is that because gold prices are moving up, there's a volume degrowth for a lot of these companies. If degrowth is there for a lot of companies, if gold undergoes a time correction or a price correction, a lot of volume growth that has vanished will be a problem for a lot of these companies. So from my perspective, given these companies are trading at a very rich valuation, I would tend to not invest in any of these companies. Wait for some correction in these companies and only then enter these companies. Senco Gold and Sky Gold are the only ones where there has been some bit of value, some bit of volume growth. Those are the companies that I would tend to track at this point in time.
And Aditya, what about large box retail like your Trent and DMart? Are you looking at those spaces positively?
Trend, I don't think there is any problem with trend per se. The growth obviously of 40 to 50% was really not sustainable. The growth coming at 18% is something that I feel is sustainable. Any company growing at 15 to 20% is what we should look at for the next 5, 7 years. From my perspective, again, Trend still does not trade at any cheap valuation. Still, it is really very expensive, even after the 50% correction that it's got. I would tend to wait to invest here. Similarly with DMart. DMart is facing intense competition from the quick commerce space. It will continue to face competition, and given the fact that it is facing competition, it again trades at about 70, 80, 90 times multiple, which I don't think makes me really very comfortable at this stage. Of course, those who got the stock can continue to hold on to the stock, but I don't think there's any fresh case of investment into any of these companies first.
Okay. Kunal, Ola Electric, and we've spoken about this, a few weeks back as well, where you suggested that you're not keen because just the price action, the momentum wasn't there. Now the stock has breached 40, and we've seen a bit of a cool off in trade today, 4%, 3.5% lower. Is this now a good time? It's seen a rally, it's seen a dip now today. Is this an opportunity?
Maybe I'll wait for another couple of days more further for the stock to cool off a little bit more. I would actually sense that maybe this cool off could take the stock back to a sub 40 mark. But I think at those levels, maybe a trade could originate yet again for the stock where you can see a momentum. But this is purely a trading play. This is not something which, at least on the short-term charts, it doesn't look like that the stock is going through any kind of a major revival. Like case in point, what happened to Eternal or earlier Zomato when it was at 40, 45 rupees odd, when the stock bottomed out. Those signs are still not visible. You look at the chunk of trading volumes for Ola Electric in the last 5, 7 days when the stock has moved up higher from 40 to 45 odd mark. And you try and compare this with the volumes, I think in the month of August or September, that time the volumes was almost 100 crores on a daily basis. The volumes right now are 12 crores and 14 crores. So it tells you that this is more of a trading based rally. This is not something which is giving investors, maybe a new lease of life into the stock price. I think in that sense, one might look at trading opportunity, a 4-5% jump into the stock price from the sub 40 levels. That's something which one could look at. But I would specifically not look at this as a trading play. I would probably want to concentrate on Bajaj Auto, Hero MotoCorp. I think there are far better names. In fact, Maruti, I think at 3% down today, I think could probably throw up a good opportunity as a contra trade.
Fantastic. Okay, so those are some trades for you. Aditya Shah, how would you play auto?
So from my perspective, auto, I think TVS Motors and Mahindra and Mahindra, both of them continue to do exceptionally well. Those are the growth picks within this sector. They will continue to do exceptionally well. I have a slightly different perspective on Ola. In my perspective, Ola to some extent now continues to become a contra bet. If Ola is able to turn around the problems that it has got with respect to serviceability and with respect to the promoter selling, I think Ola from a peak market cap of about 70 to 80,000 crores at a market cap of 14, 15,000 crores. I think it makes a good contra pick, but this is only for high risk investors. The signs of turnaround need to be really very clear for you to make a decent amount of money there. So high risk investors can consider Ola Electric. However, within the auto space, TVS Motors, Mahindra and Mahindra, those two companies continue to do exceptionally well.
Okay, so that's some of the stocks that's looking good to Aditya from the Auto Pack. Aditya, on that note, we'll let you go. Thank you so much for taking the time out and speaking to us today. Okay, viewers, about a couple of minutes left.